Hi all, good afternoon. I'm going to touch on Tiger Brokers 2Q2021 results. There's a loss. So is it worrying? I'm going to touch on it in today's video. Well, Tiger Brokers, we know that it's a leading investment and trading platform in Asia, competing fiercely with Futu. And as you know, with competition, there's more expenses. That's why you see that they are spending more money on marketing to secure funded accounts. The great news is this quarter, in terms of securing the accounts, funded accounts, it's even higher than the funded accounts secured in 1Q 2021, where there's a GameStop saga. As we all know, and in fact, I went to listen to the conference call by the management on the 2Q results. They updated that they are still applying for the Hong Kong trading license as well as cryptocurrency license. Interested potential shareholders will have to watch out for these two pieces of news, because to me, I believe it will be a positive in terms of share price, because there's a lot of people being inquiring on this point. So why not? You can take a second and later to think through on the key support points that I mentioned, the various price points in the subsequent part of this video, where it will definitely be very helpful to myself and to my audience right here. Well, this is an overview of Tiger Brokers and Futu key metrics. I look at the funded accounts number and customer deposit number. Tiger Brokers is actually quite close to Futu in terms of funded accounts. It's only 50% of the funded accounts, despite starting and being founded a few years, 4 or 5 years, or even 7 years after Futu. But you see, they are 50% in terms of the funded accounts. That's a very important point, which shows the execution skill set of the management. That's very important. And customer deposit wise itself is 37% that of Futu. As for revenue, Tiger Brokers make 60.2 million USD of revenue as compared to Futu, which is 203 million USD. Profit margin wise itself is not applicable in this case for Tiger Brokers, because it actually make a loss. As for Futu, it's actually making a margin of 33.8%. For my understanding, brokerage firms in this sector actually make around 30 plus to 40% in terms of profit margin. So I will not be surprised when things normalize and Tiger Brokers scaled out, as well as gaining scale and enhancing its settlements and clearing ability in US. Once they actually reach 100%, this profit margin itself will jump out significantly. For market cap wise, Tiger Brokers is actually only 2.36 billion USD. Wow, you look at Futu, it's 16.13 billion USD, which is much bigger than that of Tiger Brokers. So Tiger Brokers is only 15% debt in terms of market cap compared to Futu. So this page is the page on the cost that Tiger Brokers incurred in the last few quarters and this quarter. The marketing cost went up 11 million in 2Q as compared to 1Q. As for fair value loss of convertible bond, you look at the right hand side of the circle, where I circle out. Well, fair value loss of convertible bonds is actually 13 million USD. Audience have to actually take note that this is a one-off item which will have to be stripped out and making adjustment to the income statement going forward, because this is a one-off which will not repeat itself going forward. As for Q1 2021, they saw around 120k of funded accounts increase. Remember when I first mentioned in this video, Q1 is the time period where GameStop saga, a lot of retail investors become very interested in investing and trading. And that quarter itself, Tiger Brokers only have 120,000 of funded accounts being acquired. But in this quarter, they actually have almost 150,000 increase in terms of funded accounts. So this if actually tied up the marketing cost, which went up 11 million. This can be explained, but of course, like what I mentioned earlier, I listened to the conference call. Well, customer acquisition cost went up around 20+% in this quarter compared to previous quarter. So this also partly explained for the increase in marketing cost. But I can understand this and accept the company explanation. In the acquisition of customers, when the company scaled up, certain expenses definitely had to be incurred. And not forgetting that recently they raised $200-300 million for the conversion of convertible bonds as well as the placement shares that they place out. This is a positive. They have the funds, 300+ million USD of funds that they can acquire accounts. So it's only a matter of time for Tiger Brokers to reach 1 million funded accounts, which is the scale that Futu is right now at. And Futu is at 16 billion USD market cap, whereas Tiger Brokers is a 2+ billion market cap. So you give them like 100,000 of customer account, funded account being acquired. This take another 4 quarters. Well, you can easily look at an 5x, 6x. I mean, for myself, I would think that will be easily 5 to 6x in terms of appreciation, in terms of share price that Tiger Brokers can offer. So I made adjustment. You look at left hand side, the adjustment, the 1, 2, 3, 4 circle. Well, I will make adjustment for the 4 to 5 million USD marketing cost, since I assume that there will be a 20% drop in the customer acquisition cost in the long run. And I will adjust back the 30 million USD loss from convertible bonds. I will add another 2 million USD from SGX clearing fees. Why? This is so because Tiger Brokers Singapore have obtained the license to clear shares in Singapore. So once they complete the entire process and become an SGX member, then the clearing fees that they actually paid to others to clear on their behalf will be adjusted back to their P&L as a positive. And there's another 2+ million, that's just my assumption of the settlement fees that I believe Tiger Brokers right now is still paying to Interactive Brokers to help them to settle their US trade. So conclusion wise itself, at least for this quarter, I think is a income neutral quarter despite the high acquisition cost in relation to the customer's funded account. You look at the share price chart that I did in a couple of videos ago. Well, the performance of Futu and Tiger is that there's some relative changes. Tiger sometimes outperform Tiger Brokers, and Futu sometimes outperform Tiger. And the recent quarter, or in fact the recent 1 to 2 months, Futu had outperformed Tiger in terms of share price. Reason being because late August wise, when Futu released their results, the market gets some comfort in terms of uncertainty. Now that Tiger Brokers have actually released the result, it will be very interesting to see what will happen. You actually look at the share price chart yesterday, or share price chart for this whole period for Tiger Brokers. There's a few price point that I mentioned, but yesterday price, Tiger appreciate close to around 1.4 USD, went up to around 14.5, but of course during intraday high that went up to 15.6 or 15.8 USD, and there's a spike in terms of volume. That's very helpful because when there's a spike in volume, you usually see that if the share price can be sustained, you will keep on going up and up. But of course there's different point. If you actually look at left side where I put in different rows, there's 14.6 USD that I've been mentioning in my video, and there's 15.9, 18.3 USD, and 21 USD. Will Tiger Brokers retest its all-time high of 38 USD? Personally, for my own investment, which I have a big position in Tiger Brokers, I definitely believe that Tiger Brokers can break 38 USD in the long run. As always, this should not be construed as any investment or trading advice. Thank you.